Hello, in this lecture we will define prime costs. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of prime costs is expenditures directly identified with the production of finished goods, including direct materials and direct labor. So when we're thinking prime costs, we're basically thinking those things directly applicable to the finished goods, often thinking of a manufacturing company, those items being direct materials and direct labor. So we have direct materials could be something like the plastic that would go into something or the wood that would go into the product. And we have the direct labor, the labor that we can tie directly to either a job or a process cost system. So we want to be able to tie these things out directly to the inventory within a production process within a manufacturing company. Those items that are not prime costs are going to be those that we cannot tie directly to the production process. We might have indirect costs, which are part of the inventory, but which we can't tie directly to any particular job or process. Those things include things like the factory, whether it be the rent or the depreciation on the factory, a supervisor's salary, because the supervisor may be supervising many different jobs or many different processes, and therefore we're going to have to put these types of items, things like glue, small things, into an account called overhead and then apply them out. So we're not putting them directly to the inventory, job, process, or process cost system. We're going to put them indirectly by first putting them to overhead, an overhead account, then finding some way to apply that overhead to the particular jobs and the particular processes. We could also have maintenance on the factory. Anything within the factory is going to be indirect, and the prime costs are going to be those items such as the plastics, such as the direct labor, the direct materials, and the direct labor.